Hello everyone, welcome to Making Investments Simple, our YouTube channel, which is mainly designed for educational purposes. Today I will be talking about the derivatives segment. What are futures trading or derivatives in general? So, a derivatives is a financial instrument whose value depends on the values of other underlying variables or other underlying physical asset. So a futures contract is a type of derivative instrument or financial contracts where two parties agree to transact based on a physical instrument. So it can be futures of a particular stock or commodities like gold, silver, and in the commodities segment we only have a futures segment. We don't so that is based on the underlying price in global markets. So the same applies here also, in stock segment. So in futures, basically lot size refers to the quantity in which an investor in the market can trade in a derivative of that particular script. So for example, Nifty futures have a lot size of 75 or multiples of 75. So if one person has to buy one lot of Nifty futures, the value will be 75 into the index value of that Nifty future at that particular point of time. So similarly, lots of other scripts like Infosys, Reliance, or any other stock which are listed in FNO futures and options can be bought, and each may have a different lot size. So that there is a separate calculation for that too. So each contract entered into has an expiry period too. That's another thing which you have to keep it in mind. And expiry is basically, for example, a January month expiry has an expiry date, um, and this expiry means that the trades will end on that particular day. This expiry is usually the last Thursday of any month. So January expiry will be on the last Thursday of that month. February expiry will be the last Thursday of that of February. Now remember that if Thursday, the last Thursday of the month is a public holiday or a trading holiday, then the previous day is considered to be the expiry day, not the next day. Unlike in mutual funds, it is exactly the opposite, where NAV is calculated the next business day. So Saturday is your SIP date. The NAV will be calculated on the next working day. So this is something which you have to keep it in mind. So that's the expiry is something which you have to keep it in mind, last Thursday of the month. All right. So once this month's expiry is complete, the next contract starts for the next month. However, in futures, you can actually trade in the next expiry also, next month's expiry also, because there are a lot of buyers and sellers you will get. However, in the option segment, you may not get this option, because a lot of people trade mostly in this month's expiry only, especially in stocks. However, in index it is completely different. Index means Nifty options or bank Nifty options. People trade in next month's contract also. Now, so derivatives were created basically for hedging. Hedging is basically a strategy, or a term used when you are actually taking a trade in the opposite direction. So it is most commonly for traders who don't like the stop loss concept. Stop loss is something which you try to put it to stop your losses, but hedging is an instrument from which you can actually make money from both sides. So that is the powerful, but you have to understand the concepts, the basic concepts of derivative segment itself to do hedging. Or so arbitrage trading is also done using these derivatives instrument, where a lot of arbitrage mutual fund houses take a position in stocks and also sell the same position in derivative segment. So basically the difference between the stocks and futures at the end of the month will be their profit at the end of the month. So that's something which you have to understand. So that's about futures trading in derivatives segment. You can actually read about this article on my blog too, to understand more. And if you have any comments, please down below on our YouTube channel or in the blog, I'll be happy to answer them. Hope you enjoyed this video, and I will see you again in my next video.